Ladies and gentlemen, welcome back to the conference room for the 10th session of our event about central bank digital currencies in practice. This session is jointly organized by the Policy Center for the New South, the Reinventing Bretton Woods Committee, and Visa. Please welcome to the stage the moderator for this session, Ousmane Manding, advisor at Accenture. And the speakers for this session, Leong Sing Chong, Deputy Managing Director at the Monetary Authority of Singapore. Wolfram Seidman, CEO of Giesecke plus Devrient, Currency Technology. And John Roll, Governor of the Central Bank of the Bahamas. Ousmane Manding, the floor is yours.
Okay, great. Thank you very much for the kind introduction and to the organizers for putting together this fantastic panel. The title is CBDC in Practice, and we have a great panel with different experiences when it comes to CBDC. Just a few introductory words. We had an interesting session beforehand, some hints at CBDC already. Maybe just about myself, just very quickly, I'm advising Accenture on many CBDC projects, so Accenture is very, very active in this field, and I'm delighted to have the opportunity here to interact with this panel. So let us kick off with a few introductory remarks by each panelist, and then I'll kick off with a few questions, and then for the latter part of the session, please do also have your questions, and we can make it maybe a little bit interactive between you and the panelists. Thank you very much. Leon, the floor is yours.
Thanks very much. Very happy to be part of this session. So I think by way of introduction, I'll just share a few thoughts, not CBDCs in particular, but more about MAS's journey. So I think, we started on this journey when we were sort of initially confronting the question, what does the future of financial services look like? Time frame when we did the exercise, we were at 2020, and the time frame was 10 years. So 10 years down the road, what will the future of financial services look like? At one end, it could be that nothing changes, right? At the other end, financial services will be totally taken over by cryptos, right? But along the way, right, we started deriving insights, quite apart from blockchain, distributed ledger technology, and we arrived at the view that rather than binary scenarios, what if the future state 10 years from now looks like a hybrid, right? Different jurisdictions will go towards digitalization, adoption of blockchain technology at different paces, and each jurisdiction will place different emphasis, whether retail applications or wholesale applications. And hence, our first key insight was, let's prepare for a future which will see the financial services adopt, blockchain technology, but it's likely to be a hybrid environment. And then in that hybrid environment, what are the key considerations? I'll simply say that it was all about interoperability, right? When you think about different networks springing across different markets, different currencies, and you have advent of asset tokenization, the number one thing, right, was really all about interoperability. And hence, that began our journey. When you look at all the pilots that we have been doing, it is all about different forms of achieving interoperability. Cross currencies, cross assets, right? Cross networks, and interoperability between a blockchain-driven system, right, versus existing financial systems, including RTGS and all that. So, so that was basically the start of our journey. And then, quite a number of our projects also involve CBDCs, right? And we were very fortunate to have been able to partner, like-minded central banks who are willing to journey with us, as well as, the close involvement of key private sector players. So that has very much informed, right, our policy stance on this and our approach to this. So I'll stop here. Thank you.
Thank you very much, Wolfram.
Yeah, welcome from my side also, and thank you to the Marrakesh Economic Festival to organize such an interesting exchange. And I'd like to pick on your journey, actually, since I'm working with a technology company, a secure technology company, Giesecke and Devrient, and we embarked on a similar journey when new technology came up, and we looked at what is the future of money. Since we are engaged with central banks around the world to design currency, we print banknotes, but we also do digital payment solutions. We started a think tank where we pulled all the resources from the various parts of the company to discuss what is the future of money. And at first glance, we came to the conclusion we don't need a new format of money because everything is there. There's full inclusive cash. There is full convenient e-payment solutions. And there are a lot of new services, new products coming up. But then if you look at the second glance, you realize they're all fragmented. They're not interoperable, as you said. And if the world becomes more and more digital, there may be new business models coming up where public currency doesn't work. But public currency provides such a huge value to society, like cash does today, in all parts of the world, in crisis situations especially, in monetary policy, being the anchor of monetary policy, being the tool to develop economies. The question is, what will be the tool of the future if the world becomes digital? And here we realized, yes, we have to do some work here. And we looked left and right. Is there technology out that can meet the requirements? And there, where we digged into blockchain, but realized it may not be the solution for a central bank digital currency, especially when we look at retail, because we have the central bank who is the trusted entity that everyone can rely on. And blockchain may be too slow, maybe too energy consumative, and may not be a solution. So we also embarked not only on a discussion of what would a new format of money be, but we also started to develop a solution which we call Filia, the new kid on the block, Latin, the new little daughter, which we now deployed in various concepts and pilots around the globe, with Bank of Thailand, for example, with Bank of Ghana, to gain experience on how does such a platform that is operated by the public, by an instrument issued by the central bank, but used by the private market in all kinds of new products, new services, and innovation. And that's a fantastic journey that we're currently embarking, and I'm happy to share more on that panel with you.
Great. John, please.
Thank you. Let me also thank the Marrakesh Economic Festival for this invitation. And just to share some highlights of the experience in the Bahamas to date, because we went the route of introducing a retail central bank digital currency, the Sand Dollar, and we think ultimately it also has the potential for some wholesale use, but at the early stages, it's about the retail. When we started this journey, and it is almost paralleling the advent of mobile payments solutions in the Bahamas on the whole. So the CBDC is not much older than the introduction of mobile payment technology. And so our pilot and experience to date has been really working with the smaller payment services providers who in many cases the CBDC is the source, that the funds that they use on their platforms. Our focus was on ensuring that from the outset, these new entrants to the payment system would have an interoperable platform on which to operate. And so that positions us because now our commercial banks are beginning to see the importance too of also having mobile phone-based payment solutions. And so our communication to them too is that those solutions need to be planned with the interoperability with the CBDC in mind. And also, we want to be able to get them into that space earlier than they might be able to if they're relying solely on their own technology. So a part of our focus, recognizing some of the public goods aspect, has also been to develop what we call the white label app, so that for basic peer-to-peer payments, and we're thinking that we also need to provide some access for point of sales and merchant solution, just at the plain vanilla level. So that is work that we're doing right now. In terms of where we are, because we're only focused at this stage on the new payment services providers who have very small market share. So use of the CBDC is still very low. However, in terms of current usage of mobile wallets, we estimate that it equates to about 20% of the population relative to those who have access to the banking system. So it's a good start in terms of how we focus on growing the ecosystem, particularly for merchants, getting banks involved, getting the government involved. The very important thing for us, fully appreciative of all of the policy implications, etc., was to be careful to understand, one, the central bank is not in the business of providing frontline customer service, so the provision of the CBDC is left to the financial institution. The other thing was to make certain that we understood that this is cash in a digital form, so we're not going to get carried away and design an instrument that behaves different from cash. But if it has a financial inclusion component, we also have to think about the fact that with cash, there is no exclusion. There's no qualification criteria for holding cash. Of course, for the CBDC, it's not anonymous. And so bringing that consideration to the forefront has meant that from an anti-money laundering and financial integrity point of view, we have to make certain that the ability to activate and onboard for digital payments is not hindered in any way. And so I think in that respect, if nothing else, we've had tremendous movement forward in terms of simplification and from a risk basis of how persons get to own board for financial services, and making certain at all times that there is that parallel and equivalence with what exists in the banking sector. And that takes me to what I think is very important from the policy point of view, because at the entry level, e-money, CBDC, you could equate it to stored value products. And so the AML standards that the FATF and other standard setters have set, that's the basic for how someone gets access to e-money with minimal or zero KYC. And so I think from an international perspective, as we move forward, we're going to have to be very careful as to how we define and continue to evolve the baseline standard for access to electronic payments and products. And then also, I think the other issue would be to ensure that if we're going to hit the G20 targets for cross-border reduction in cost and reduction in the time of settlement of payments, that we realize that the new dimension of financial inclusion now also has to extend to how, in the individual's context, countries are able to participate on an equal platform in terms of the end-to-end movement of payments. And therefore, that means that we're going to have to make certain that the central banks play a role so that the layer which currently encumbers a lot of the developing countries, the correspondent banking layer, does not become a technical means of frustrating financial inclusion goals. So I think the discussions on CBDCs becomes very relevant from the point of view of understanding how we can improve the cross-border aspect of financial inclusion. Thank you.
Thank you very much. Excellent. So, yeah, a mix of views, but also some convergence, in particular around interoperability and fragmentation. And I think that's sort of quite interesting. Maybe it's fair to say that the starting point, and I think, Wolfram, you mentioned already, the starting point today is we have a financial system with no interoperability. I mean, I think that's fair to say. We have a cash system which is completely separate, and then each financial institution is a completely isolated institution, and the only way to communicate is via secure messages. So I think that is our starting point. So we start from a very low level I think when it comes to blockchain-enabled applications, there is a aim to drive interoperability, and I think that has brought us a whole new set of questions and challenges that we are going to face, but which I think is very, very positive. And maybe one other anecdote is, and I think we've heard it as well on another panel today, which is the decline of cash, which seemingly is often motivating central banks to consider CBDC. But I think it is fair to say that it was the reverse. The cash dominated, right, and has declined, and now there seemingly is concern about a reverse. What if central bank money again in retail is starting to play again a bigger role? Could it change the balance of sort of influence between the private sector and the central bank?
Do you allow,
Yeah,
allow me a remark to clarify that? Cash in circulation is ever growing. But cash is not used so much at the point of sale in developed countries or where infrastructure is in place, because the convenience of electronic payment prevails.
Yeah.
And there's the challenge, because how can monetary policy works if cash is only used as a store of value when we need it in crisis situations, for example, also in a very operational way? So that's the challenge. And there we have to work on interoperability and solution.
Okay.
But cash is still continuing to grow.
Fair enough. It is continuing to grow in nominal terms, but not in terms of broad money. Right?
Yeah.
Look, fair enough, and I think it's a different discussion about cash. Let's maybe not go there. But I'd like to if you think about CBDC going forward, and this panel, of course, is about CBDC. What do you see as the main objectives? John, you already mentioned cross-border payments is very key. You mentioned financial inclusion. To me, it's not so clear why, when it comes to financial inclusion, why CBDC actually could be a good vehicle to do so. Central banks often, they seem ill-equipped to advance financial inclusion. They do not interact with consumers, etc. Right? But beyond financial inclusion, where do you see the main objectives that central banks are looking at when it comes to CBDC? Let's start with Leon and to the round. Yeah.
Thanks. I think right from the outset, we basically trained our focus in the cross-border wholesale space. We didn't get too much into retail at the start. For the reasons that's stated. Generally, the retail payment system in Singapore was pretty efficient. We didn't see a big problem statement there. But the cross-border wholesale space, the transfer of funds, cross-border wholesale setting was kind of staring quite largely at us. And we therefore decided to focus on that space. So I think the first main objective is to what extent blockchain DLT technology, right, can be used to enhance efficiencies, right, and make the whole cross-border funds transfer as well as settlement, right, a more seamless experience. I think we are all familiar, from a correspondent banking perspective, there are inefficiencies there. And from a compliance perspective, right, given the need for AML, understandably, right, that throws some friction into the process. And even from a financial inclusion perspective, right, the correspondent banking network, right, has actually pulled back from some of the emerging markets, right? So then the question arises: is there an opportunity to harness, right, technology in a way, right, that can actually, right, lead to efficiencies, bring down costs, and promote inclusion at the same time? And hence, I think, we decided it's not something that we can implement quickly, but funnily enough, looking at public blockchain and, the crypto space, those actually offered very useful examples of how things could be done better. Because I think, the way that industry operated, quite apart from speculative elements, right, the infrastructure that was built actually, was a useful demonstration, right, of potentially how seamless and efficient things can get. And it offered learning lessons for us, and therefore we began to, see how to construct experiments, right, to see how we can, build muscles to apply those technologies, right, in the cross-border wholesale payment space.
Interesting, yeah.
I also want
go
to
ahead.
say that financial inclusion is one of the returns that we see in a country like the Bahamas, but it's a public good. And the way you define aspect of what is a public good will vary from country to country in terms of the infrastructure that you need in payments. In the Bahamas case, our banking sector has 6 financial institutions that provide services, and this is in a country with a population of 400,000. So the economies of scale that would achieve and that might motivate certain investments in private infrastructure are going to look different from an incentive point of view than in some more developed payment systems. So for us, the opportunity, just like how the central bank would have stepped in and sponsored the RTGS system, the opportunity was to make certain that you could accelerate the introduction of a new part of your infrastructure. And the other aspect of having the interoperable platform is to make sure that you're also facilitating the ease of consumer choice. Because if you look at PayPal or Venmo or some of those others, they thrive on the basis of the network effect of how many persons are on the same platform. That becomes a problem in very small financial systems and small markets, to the extent that where critical mass is achieved, it can also lead to other inefficiencies in terms of the cost and whatnot. So removing some of these elements out of the equation has to be considered from our perspective as part of the public goods contribution that the central bank sponsoring part of the payment infrastructure should provide. Because I think at the end of the day, it won't really matter how much CBDC the public holds, but how does the CBDC facilitate the net settlement process that's going to be happening even in the domestic space? And does it make it more efficient, similar to the focus on the cross-border element?
Ravon, do you want to?
Yeah, I can also repeat what has been said before already. So financial inclusion, interoperability, and I would add innovation is definitely the objective that we address with CBDC. Innovation in terms of driver for the digital economy. And we gained great experience with fintechs, for example, who loved to be able to use a government-provided platform for a mechanism to settle. So they didn't need to use existing card rails, for example, which are on batch processes, where it takes 3 days before they can clear their balances. So that drives the time to market down, and that drives the operational costs down. And here, CBDC can be the platform that drives new products, new services, and helps also to help smaller institutions, like you said, against the big giants who already have the network effect, to not be forced to build the entire infrastructure themselves, but use the common denominator which is provided by the public.
Indeed. And I think, I'm glad you mentioned innovation. I have to admit, I often find central banks are mentioning innovation not often enough when it comes to CBDC. In fact, many central banks seem to be arguing in favor of CBDC more from a defensive point of view, arguing cash is in decline because of Bitcoin, because other central banks are doing it, but few do seem to see it as a vehicle for advancing financial innovation, for equipping the financial system, with new capabilities. So I'm glad you put innovation, in the center of the debate, because for me it's a lot about that. It is to expand what our financial system can do.
But I think even if some of the response was defensive, the good thing about it is you're recognizing that the innovations and change are what the public is demanding in terms of the speed and the efficiency of payments. And also, the public expect that there's going to be some level of regulations and oversight, at least from a consumer financial protection point of view. And therefore, in retrospect, you do have to make a decision as to exactly to what extent is the public good aspect going to be manifest in terms of how the central bank responds.
No, fair enough. I'd like to you mentioned cross-border payments and the criticism of the correspondent banking model, which I think is driving a lot of the motivation for using CBDC for cross-border payments. But for it to work, I think central banks will have to accept that their central bank money will have to circulate offshore. If we really wanted to get rid of the correspondent banking model, there would have to be an outright exchange of central bank money with non-residents, you see. And central banks have mixed feelings about that. What do you say? I mean, for me, that is the innovation. You know, it's an outright exchange of central bank money between residents and non-residents. You've done it in Project Dunbar. You know, we are doing it in Enbridge. We have done it. The foundation was laid in Project Jura between France and Switzerland. For me, that is the sort of approach that seems most promising if we really want to improve international payments.
Just a quick response to that. You know, when you do pilots, right, I think you have to do it layer by layer. So the first is to really fully understand the potential of that technology, right? Unconstrained, what does it look like, right? And then you show that unconstrained, it can be done. Then after that, you start to factor in, you know, different degrees of complexities. One interesting project that we've just announced, in fact, last week, Project Mandala, this is done with the BIS as well as a few other partner central banks, is to see to what extent, because CBDCs is not just a digitalized form of central bank money per se, right? When you look at digital monies, right, there's an additional aspect, which is that of programmability, right? So it's not just atomic settlement, but, you know, the potential to program usage of the money. And what Project Mandala aims to do is, first and foremost, recognize that in today's reality, right, you do have currencies that are subject to jurisdiction-specific rules, right, including capital flow measures, et cetera, and, you know, the interesting part of this is, can we move beyond just a pure unconstrained model, right, to embedding and automating, right, jurisdiction-specific rules into the system, right, and automating, you know, compliance with such rules as the transactions happen. Still early days, but we thought it's useful to explore this. We know that, you know, there are specific jurisdictions, less so Singapore per se, but we know that for you know, some jurisdictions which first and foremost are very advanced, right, in the usage of this technology, but at the same time, where the use of their currencies are actually quite restricted, are very, very actively, you know, exploring means to embed, you know, programmability, right, that enables, you know, compliance with jurisdiction-specific rules automatically as you know, effect the transactions on a real-time basis.
Indeed.
Yeah, well, I think it is really going to be an issue that resolved by technology, and I'm not going to underestimate what will be achieved in that area. But to the extent that a CBDC is accepted cross-border, it is also the understanding that on a net settlement basis, whomever the issuer is, that they will honor the claim if necessary. Because in the physical world of cash, we collect the cash and we physically transport it to wherever the issuer is, and we get ultimate value. So in the digital space, that's going to be taking place within seconds or instants. So it does mean that from a programmability point of view, that ability to be acceptable cross-border is going to depend on whether the issuer is sanctioning that in the way the CBDC is designed. But I think we were going to be in a better position to monitor and see, you know, what is happening on a cross-border basis if this element of cash is now moving digitally. So that might be an improvement over the adverse effect of physical cash that might be moving across border. I'm not saying that from a big brother perspective. I'm just saying it from the point of view of the data and being able to see it in more holistic sense.
Very good. And I think it's good you mentioned cash again, but a lot of U.S. banknotes, famously, 60% circulate outside the United States, right, which is a huge amount, about $1 trillion. So therefore, the fact that central bank money is circulating offshore for cash is very common. But for CBDC, it may give rise to new challenges.
And that's very important because I was in a seminar earlier this morning, and a colleague from the ECB mentioned, look, we're working on a payment instrument. And I think that if we confine ourselves to continue to think about improving how the payment aspect of this instrument functions, then we might not be so tempted at the public sector level to try and over-engineer, what a CBDC looks like. And there are private innovations that can occur. And the private innovations around how they use any payment instrument, I think you want to leave it up to the private sector to see how they innovate. But just leave the cash element to be, the main objective that the central banks deliver upon.
Very good. Well, do you want to comment on?
I just want to add with an anecdote from one of the projects, because money is a payment instrument, yes, but it's also store of value, and it's always perceived as both. And we experienced that, for example, in Ghana, in a rural area, offline, off-grid pilot, where merchants were equipped with a device and citizens could exchange cash via a digital device, a card, which they could use to do daily purchases, and even without connectivity. So that was an offline pilot, because we believe that this functionality is a key requirement for currency. And interestingly, after a few days, when people started to get familiar to that, and they could trust in that card because it carried the signature and the coat of arms of the central bank, people came and brought bundles of cash and wanted to load them on the card because they considered this to be more safe since it was protected with a PIN, and they could hide it from the rest of the family members better. So we have to look at how CBDC is also accepted by the people and how they look at this new form of currency.
Very good. And maybe if we continue on this line of thought in terms of adoption, because I think the idea for CBDC is it will have to offer something that is attractive. And I think we should obviously distinguish between retail and wholesale. Retail, and Wolfgang, the example you just gave is one, right? Offline, it's safer, etc. At the same time, I think central banks are struggling with the fact that for consumers, in particular in advanced economies, to pay in CBDC or to pay with a debit card, credit card, PayPal, consumers don't even know the difference, you see, nor do they care. It's mostly about convenience, you see, that a retail CBDC will be struggling, actually, to find adoption, you see. Maybe if we could focus a little bit on what do you see as the sort of the features, and John, you mentioned in Bahamas, pickup so far has been very small. I looked at the numbers. It's just a fraction, of course, of cash in circulation, but it may just be a matter of time. But if we look a bit on retail, what do you think key drivers for adoption could be, and then also for wholesale? And international, well, is both, of course. It can have a retail component for remittances and can have a wholesale component for FX and other international transactions.
Well, to the extent that it's supposed to be the other side of physical cash, we understand that it is also the ease at which individuals can get onto the platform. So a part of the focus right now in the Bahamas is making it easier for individuals to open up a mobile wallet account, so cell phone onboarding. So that is very important. We also know that individuals want to maintain a connectivity to their banks. So to the extent that they're given access to these services through their established banking relationships, we appreciate that that is going to help with adoption. From the bank side, one of the use cases is that there's the potential to reduce the logistical inefficiencies around their cash operation, because in the case of the Bahamas, having a very scattered archipelagic geography, it's very costly to provide cash services across the various islands, even if banks are operating using the automated banking machines, etc. So one of the value proposition is for them to begin to see the CBDC or the mobile payments as the final extension of the withdrawal and the deposits that individuals make from a mobile wallet. So we also address that by ensuring that there is interoperability with the traditional payment system. Because again, there is an understanding that individuals still want to have the convenience of transferring excess holdings into bank accounts to the extent that there is that significant trust in banks. So we have not seen yet any likely tendency that monies will move from the bank accounts in mass into CBDC, but more likely that CBDC is more attractive and acceptable if merchants can see the ease of connection and the flow through to their deposit accounts.
Very interesting. Wolfgang, would you like to?
Yeah, but I'd like to give it a different twist, since if you're asking what is the killer application for CBDC, you may ask the wrong question, because we don't want to kill the private initiatives. I look at CBDC being a platform which has a technology stack and a platform which has a regulatory stack. And the mandate of the central bank is to engage wherever the market fails. And that might be in an inclusion situation to offer maybe a digital wallet to the unbanked, help them to get an off-ramp, an on-ramp into the financial ecosystem. That might be in getting rid of fragmentation or driving innovation by offering an instrument that can be used by someone who has a great idea and wants to innovate. So that is the way how we look at CBDC. And I always give that analogy, and that makes it so challenging sometimes, that we all experienced with the iPhone, for example. Look, when the iPhone was developed, and it came up in 2007, around that time, there was even no app store available. And today, there is no single business process that doesn't have an app. So do you think that the engineers of the iPhone had all these applications in mind that came out now that people are using? Not at all. But they had the vision of designing a platform that can be used for innovative elements and for innovation. And that's how we look at, how we need to look at CBDC, and provide it with a powerful platform. And I don't even differentiate between wholesale or retail CBDC. It should be general purpose, a technology stack that serves each of the purposes depending on what business model needs to be addressed.
Then would you like to?
No, thanks. I think this question is a very important one. This question about, what are the main drivers and obstacles to adoption, because it forces the issue of who are we serving, right? It's one thing to say, let's do a project Dunbar, right? Amongst a group of 4 to 5 central banks, willing and able, and then each central bank brings along with it a few FIs, and we do a successful experiment. And when the experiment is successful, we all create headlines around it, right? But it's another thing when you ask about barriers to adoption, right? So this brings us out of a pilot territory, right? And how are we thinking about implementing this in practice? So I would say that there are a few key questions you want to ask, whether it's on the retail or on the wholesale side. So on the retail, in fact, this is a question that applies equally to both retail and wholesale. What is the value add, right? When you push CBDCs, whether at the retail level or at the wholesale level, what additional value add does it bring relative to existing payments modes and instruments, right? You have to satisfy that question. The second is, on the wholesale side, right? The question is a bit larger, right? What value add does CBDCs bring, right, relative to existing RTGS systems, which are already real-time gross settlement systems, right? Second, impact of wholesale CBDC vis-a-vis monetary policies. Third, impact of CBDCs vis-a-vis private sector, right? Private digital monies, right? Straight away when you consider these range of factors, you have to take into consideration in introducing this instrument, right? What is its role and impact vis-a-vis other components of the ecosystem, right? Because CBDCs, while we believe in the promise, right, but the actual implementation will run into all sorts of issues which you have to address and square, right? The role of the government versus private sector is quite key. Earlier we talked about interoperability, and I think we can all agree interoperability is key. You don't want to push new technology but end up fragmenting the landscape. But just to address interoperability between government and private sector is a key issue. It's a very difficult issue to unlock because some banks, right, who may be running ahead, with this innovation, who are strong in that field, may feel that they want to be the first mover and dominate the market. And when you start discussing with them interoperability, they will look at you and they will not like you very much, right? So it's a non-trivial issue, right? So I would say bottom line, a few factors, right, that we need to consider, right? First, strong value add, right? What is the value proposition of introducing this? Second, clear role, government versus private sector. Ideally, there is a good understanding. This is the role that government plays, providing the underlying infrastructure on which private sector can offer innovative products, to the end customers. Sometimes not a straightforward path towards that lending zone. Third, achieve a good balance between conflicting objectives, right? Each part of the ecosystem has its own objectives. It's not a given, right, that everything will be aligned. How do you strike the right balance? And last, coming back to innovation, which you like a lot, allowing for innovation, but yet safeguarding financial stability, right? So, long and short of it is CBDC's whole promise, but for it to actually be implemented successfully, you have to address various policy considerations, strike a good balance between the objectives of different stakeholders, right? But above all, introduce it safely.
Fair enough. Maybe allow me to take a step back. And could one not argue CBDC is just a different format of money, right? I mean, today we have physical banknotes and we have book entry money or scriptural money. And in the future, we may have digital tokens, as a monetary format. So, we're not introducing a new currency. We're just giving it a different format. Are central banks maybe overcomplicating considerations for CBDC? Because it's just, just another format that will live on a different financial market infrastructure. As a slightly provocative question, are central banks making it too complicated when it comes to communicating what CBDC is all about? Is that a fair question? Any? John, you have experiences, of course. You've already introduced it. Have you made it too complicated for you, for the Bahamas?
Sometimes I think that the conversation is overcomplicated, but it is useful that it touches upon all of the important issues, because some of the points that relate to financial stability, such as not paying interest on holdings of CBDC, etc., that's an example of a principle that comes across already, at least in the Bahamas case, and I'm sure in some other countries' case, given that we got technical assistance from the World Bank and others. That is a principle that came across already in terms of how stored value product and e-money should look, in terms of you're really only a custodian of the balances that are being held. And also in that context, to the extent that it is e-money, it is deliberately and explicitly designed so that it is not a deposit. It doesn't have deposit-like features. And so you can build into the CBDC design the clarity so that we can define when a transfer or holding suddenly changes form and becomes a deposit. And that probably looks no different than when the liability transfers from the individual to the central bank, and or it transfers from the central bank to the commercial bank, and it's the commercial bank that holds the equivalent claim on the central bank in terms of their reserves as opposed to my cash deposit. So we have to recall that those equivalences already exist in terms of how cash is used to transfer value and to sever when the liability or the claim shifts from me to the central bank to from me versus a commercial bank or some other entity. So I think some of the thought process around the design of CBDC on a theoretical plane might often complicate those issues, but as long I think if we continue to step back and recognize the kind of work that was being done in the e-money space, et cetera, that you would see that we've already anticipated a lot of these issues. But it is also a good warning to make certain that central banks do not try to give digital cash or digital money new functionality, because we all know if you try to get an instrument to do more than one thing, you're going to have a problem because it's not going to do two things well if it's only designed to do one such thing. So if it's going to be cash or it's going to serve cash-like properties, then you want to focus on how you achieve that with existing cash.
Maybe if I can jump in here, and I like this question, central banks are overcomplicating things or overdoing it. My first point would be that, when it comes to payments, right, central banks must take a view, right? The technology is out there, the landscape is changing very quickly. You have to find a way to make sense of it and decide for yourself what stance do you want to adopt. Now, then the question is, what different approaches do you take? And I'm still operating in the wholesale, space. The first example can be a very simple and straightforward one, which is what we saw in China, right? Which is, the dominance of, two wallets, right? For a very, very large economy. And, for the People's Bank of China, not tenable, right? In case of any market disruptions, you need public infrastructure to be there. You need public infrastructure to be there. And for them, no regrets. It's as simple as that, right? So I wouldn't say that's overcomplicating. It's actually, safety and soundness, right? Adoption, right? They are in the midst of promoting adoption now, having built the system, but their first and foremost consideration, safety and soundness, and to ensure that, if payment system fails, right, it's not just in the hands of the private sector, right? So this is the first example. Going to the other extreme, if you do have a view that CBDCs can play a role, then subject it to market test, right? If your market is such that, your private sector players can achieve that objectives for you, and then it's up to you to decide, whether or not actually maybe they're a better place to do it, right? And under that situation, private sector players will tell central bank, stay out. We can do this job better, right? But on the other side, right, it may be that, over time, and I believe we are starting to see that today, there is some convergence of views, right, amongst different types of private sector players, right, that looking across different instruments, there is a potential division of labor, right? There is a customer-facing side where actually, customer can decide which payment modes and instruments they prefer, right? And then, but for the wholesale space, right, it may be that, even banks considering, use of tokenized deposits, right? That use of tokenized deposits may not even be as capital efficient, right, as a central bank instrument which is trusted, right? Capital efficiency is a consideration, and that actually, in the wholesale space, having CBDCs power and grease, right, the digital asset ecosystem may actually be the most efficient form, right? So if you start to have that convergence, then you know that you're in play, right? We don't want to come out and overly promote CBDCs. We don't want to believe too much in our own hype. Somebody earlier today used the word bullshit. But as I said, you're subject to a market test, and it may very well be that market does arrive at the conclusion that there is a role, right, for CBDCs that is distinct from, say, for example, stable coins, bank tokenized deposits.
Oh, very good. Wolfram, please.
Yeah, I also like to add, not being a central banker, but working with central banks, I have to compliment them. They embarked on an incredible journey to build up competences and knowledge in a short term. And yes, some of the discussion may look complex because there's responsibility. You can't play in the same way as the private market does. A startup can try a business model and can fail. The central bank has a responsibility, but they built a lot of competences and engage now, since they also have understood there is this thing like network effects. So if there are private big players that come up with very attractive solutions, they may crowd out others, and then the market may fail. And here again, this is the responsibility of the central bank to engage. But I really give them a compliment. They build up around the globe, they build up teams, they build up competences, they work on experiments. Of course, I always encourage them to do more, to take also the decision to go live in a certain aspect, because we only see a lot of pilots at the moment. But I have a lot of respect from this work.
Yeah, no, fair enough. But I think there is a tension here. Some seem to be arguing if there's market failure, the public sector should intervene. If there's a higher public policy interest, the public good aspect, an efficient payment system is of course is needed. On the other hand, there seems to be also a view, and which is the private sector, if the private sector does a good job, then why should the public sector intervene, right? So there seems to be a little bit of a tension between the two. One could argue central bank money is special, of course, because it's a riskless medium, and for large value payments, that is why it is the preferred payment medium. But that wouldn't hold for retail, right? The argument of an extremely safe medium is not really required for retail because transactions tend to be of lower value. So, this is not to deny the role of the public sector, but I think in retail, where the argument is safety or resilience or stability, CBDC could be an approach because it's about more diversification of the system, right? But in wholesale, where the argument is the riskless medium, the safety for large value payments, I would tend to believe the argument is much stronger. That would be my sort of view. You know? For CBDC, it's much stronger for wholesale. Because of that sort of that balance between resilience, diversification, and risk-free medium. Yeah.
Well, I think it's going to vary from country to country. And what is very important is to do the assessment, to see where the gaps and the needs are, and then to decide what aspect of the public infrastructure might be lacking. And it is true when you look at some of the very, very developed payment systems, it is hard to put a case forward for retail CBDC. But that all depends, I suppose, on the angles that one is looking at it from. And you're right, in other cases, the wholesale takes some stronger point of view. But even at the retail payments level, there is a presumption that the net settlement process among the financial institutions is sufficiently developed and efficient, particularly for P2P type transactions or P2B type transactions. So it presumes that the private sector has done a sufficiently good job in addressing the issue. And I think it's going to look different when we transport the considerations into the cross-border space. Because in the cross-border space, I think even there, where you draw the line from financial system to financial system might start to look different in terms of whether those countries stop at the wholesale or the retail level.
Do you want to, shall we continue on the cross-border? Again, we had already touched upon it, but I think clearly there's a lot of attention is there on cross-border payments. And I think also with regard to another aspect, which is this notion, we are here at the IMF meetings, so this is about the international monetary system, the role currencies play, the management of international liquidity. And many thought, certainly I had at the beginning when I looked at CBDC, could that be a way of making smaller currencies more attractive and maybe bring about greater diversification in the international monetary system to allow smaller currencies and therefore countries to be less dependent on the key currencies that today dominate international transactions. Is that something that resonates with you? That is, you are equipping your currency with, you don't like the idea of functionality, but to some extent, ease of use. Could that make them more attractive? And therefore, could that make them also less dependent on using third country currencies, typically the US dollar, for international payments? Is that something that resonates with you? And then I'm going to take questions from the audience. But
I would say, in theory, yes, and definitely very, very much worth exploring. But I think, taking one step back and facing reality, right? The first thing, right, is to acknowledge that, your earlier point about, is there an inherent conflict between, private sector versus, public sector objectives and all that kind of stuff? I would say, it's both need to be satisfactorily addressed. As I said, it's really about achieving a good balance between different types of objectives, right? Market innovation has and will always continue to be there. It is the job of central banks, right, to worry about safety and soundness, right? That is non-negotiable. So then the question is, having regard to safety and soundness, how do you actually let innovation take place, right, in a way that can reap benefits? How do you work with the private sector to come up with good solutions that satisfactorily address both objectives? So that's the first. The second is your point about can it help to transform the nature of illiquid currencies? I said yes in theory, because at the end of the day, for all the pilots we have done, we have actually not achieved scale, right? Achieving scale is a different thing altogether, right? So, as John, you said earlier, jurisdiction by jurisdiction have their own considerations. We did manage, through our experiments to work with different types of regimes, right? Regimes with fully open currencies, regimes with, currencies which are a little bit more restricted, and, to see whether interactions across these various currencies, right, can we still achieve atomic settlement. In some of the projects, we've actually also made a deliberate effort, right, to envisage the use of vehicle currencies. So notwithstanding the potential of transacting illiquid currencies versus illiquid currencies directly, right? As I said, we haven't managed to scale, we haven't actually managed to solve for liquidity on a global scale, right? But before we reach there, isn't it worthwhile thinking about maybe potential use of in-between currency? Whether that to the extent that some, the transactions of illiquid currencies may still need, right, the use of a third currency to achieve liquidity, right? Can you have a vehicle currency in between and still achieve atomic settlement? PVP, VP, right? That vehicle currency can be US dollar, can be other currencies as well, right? So I think there are two messages here. First, we got to acknowledge that we are not there yet, right? So as I said, let's not get too carried away with our own hype. But secondly, right, important, as we continue to experiment, right, There are certain assumptions you make. It then leads to certain types of experiments and pilots. There are other assumptions that you need to make, right? Because the world is not complex, right? And so, if there's a need to either embed jurisdiction-specific rules into, your construct, or use, vehicle currencies that involve international currencies. I think these are various ways of creating pathways to addressing a very, very complex market environment.
Understood. Yeah.
So,
Yeah.
I just wanted to stress again that one of the problems that countries in the Caribbean and many in Africa have is the correspondent banking issue. And that is a major hindrance in terms of cross-border payment. That is where the costs accumulate in terms of the non-bank money transmission services, etc. So we are not going to achieve much at the end of this process if we end up with a system where you have fragmentation and isolated pockets where the efficiencies and the access are not achieved because the risk-based elements that should be applied for anti-money laundering, etc., do not come across. And there's a very strong view that in many quarters, the AML framework isn't being as objectively applied as it needs to be. And that undermines the kinds of efficiencies that we need to achieve in cross-border payments. So we cannot lose sight of that in this conversation.
No, very good. Allow me to, just one quick follow-up on the AML, because you could argue, if you purchase, and the Central Bank of the Bahamas, of course, does all the time, foreign securities. So you purchase a foreign security, you are subject to the rules governing that securities. The security is, if it's a US Treasury bond, logged with the Fed. So all the KYC, et cetera, is done, similar to anyone buying this particular currency, you see. Is that not something that we could imagine for CBDC as well? That is, if a foreigner is buying your currency, it is subject to your regulation. It's your currency. It's like a treasury bond.
I think so. One of the lessons we've learned in the Bahamas is that where we went ahead and we reformed the AML rules to be more risk-based, we see that the new fintech providers have been more agile in incorporating it into their business model. So an opportunity in the global space would be that if we are saying that the standards have evolved and are more flexible, we might achieve some leapfrogging in terms of how the ease of payment movement is facilitated if the wholesale CBDCs are involved, and there's a greater element of direct participation in terms of the end-to-end movement of payment. So that's something to bear in mind.
Interesting. Well, would you like to comment? Shall we take a question? Let's take a few questions from the audience. Oh, there, Subnandu. Don't start again with a provocative statement.
Okay. This is on the retail. I'm not asking question as an MAS officer, just as an independent observer of this session. Many a times, central bankers have argued that we don't need retail CBDC because the electronic payments system we have is doing its job. It's efficient. It is close to zero in terms of cost for retail customers. But one thing we have ignored that efficient payment system operates on two systems coming together, either an identity system or a mobile network. And that has been merged with the electronic payment system of the banks. And together, they have created a super efficient network. Only few countries can afford to pay for it. I thought the retail CBDC can merge the identity and the money part together and make it a much superior, affordable retail system for low-income and middle-income countries. Is that something all of you would like to reflect on?
Shall we take a few more questions? Excellent question. Are there other questions? Maybe we can combine. Yeah, Alexander.
Slightly different question.
Yes, of course. Yeah. Go ahead.
May I go ahead?
Yeah.
Governor Roll, sorry, this question is for you. And first, may I start by commending you and your team on being first movers with the sand dollar. Actually, I had the privilege of traveling to Nassau in late 2021, and I used one of your mobile wallets. I believe it was Suncash. I downloaded the app and used sand dollars for the first time in your supermarkets there. And so thank you for the privilege of giving me my first CBDC experience. Just in the context of thinking about deployment and adoption, if you think about the order in which the CBOB went about deploying the sand dollar, starting first with the mobile wallets and then later with the local commercial banks, I believe many of which are foreign owned. With hindsight, would you have considered engaging the commercial banks sooner? That's my question.
That's a difficult question. I think about it a lot, but I want to be careful in terms of the order, because one of the things that is also happening is in the very small central banks is how you're managing your capacity bandwidth. So we're also learning a lot in this small space that will be relevant when we start to branch out to the commercial banks. But because of the order, yes, you have to manage a lot more the public perception as regards to whether it's a standoff posture of the banks or not. From my interaction with the banks, I would say is more the case of the central bank from a capacity and bandwidth point of view, dealing with the new fintech providers first and then getting to the banks. And I think in a different setting, that may well be the setting, that might well be the results, but it may also be the results because thinking has evolved a lot more since we started as well, which is a good thing.
Okay. We had the question on the merging ID and money, and I think that's really for me as well. The innovation for me is that today we operate maybe just if we step back, completely different systems, right? We clear securities in CSDs, we transfer money, typically in the large value payment system, and then obviously we need to manage IDs somehow. What the token world allows us is to put everything basically on the same infrastructure, and that should bring us enormous efficiency gains. I think this is where the question was heading.
No, and that we see that also as part of the public good, because even when we look at the way very, very small financial services providers are managing the AML issues, they are constrained in terms of how they can meet the compliance requirements. So one of the things that's important is to have centralized EKYC facilities, because it will provide a better foundation for some of the competitive forces that you want, such as the ease of portability of accounts from one financial institution to the next, whether it's a mobile money account or regular deposit services. So we are developing EKYC systems that will speak to that, but at the same time, we have to be mindful of how we address the governance issues around the privacy and other concerns. And we don't want to shy away from it because of that, but I think we want to use the opportunity to think about how you build up the governance mechanism so that people can have control over how their information is used.
Interesting. Wolfram, would you like to comment on it?
Definitely. It's the question, what is the content of digital public infrastructure? And I share your view that here there's a lot of efficiency potential. However, one needs to maybe also see the trade-offs between privacy and convenience. Some people may trade that. And that's a political debate. That's not a technical or a financial debate, but it's a political debate, which may be different in various infrastructures. So we also see around the globe, we see various projects where identity and payment is connected. And that may be very efficient, but it may not meet the political requirements of other jurisdictions. But clearly it has the strong potential of efficiency gain, network effects, and also offering that platform that allows innovation to happen. So I see a lot of potential there as well.
Like an ID-augmented blockchain, basically. That. Mm-hmm.
Sorry. In fact, I forgot to add the third component. The argument against cash versus the electronic payment versus digital retail CBDC, there's a third pillar. Today, efficient electronic payment system today is also integrated to a third system called QR payment system at the merchant side. So given you have merged it all together, it looks to be super efficient, but people have not discounted the cost of bringing all together to make it way it is today. So I think back to the question of retail CBDC, it allows you to tokenize not only currency, it also allows you to tokenize the identity. I think there are solutions out there to protect identity. Also, it also encodes the ownership of the asset at the marketplace side. So you are now combining the e-commerce marketplace identity and the value transfer into a single piece of token. Again, it's not a solution for every country, depend on what the country needs to solve for. There could be an opportunity for retail CBDC to hold its own ground. As again, a general discrimination, it is not as efficient as a existing electronic payment system.
Do you have other questions? Do you have a question? No? Okay. Over there on the left, please.
Hi, thanks. It's working? Great. Hi, thanks very much. This presentation's been absolutely fantastic. I'm Benjamin Mossberg. I'm from the Atlantic Council in Washington, D.C. And honestly, I just want to thank you, Governor Roll, for your attention to issues on the illicit finance side, specifically AML and CFT that you raised a few times during this discussion. I think that that's incredibly important as you think through the future of CBDCs, digital currencies, and in the previous session we were talking about digital payments. I guess I come from a background of the U.S. State Department and the Treasury Department. I'm at a think tank now, but what I find myself sitting here thinking about through this discussion is, with so many different countries globally, we have Asia, Latin America, or the Caribbean, excuse me, and others in the previous session representing a wide range of views. How are you thinking about transferring your knowledge and what you've learned through these kind of journeys, I think, as another one of the speakers described earlier? Is that being done through like the FATF-style regional bodies? I mean, short of panels like this, I mean, how are you thinking about transferring that knowledge and those experiences? Thanks.
Maybe before we answer, another question that is maybe related, or another question you would like to ask? No? Okay, question here.
Yeah, I had a question which was actually been partly answered, or at least tracks have been given. On one point, I'm thinking about CBDC as a very powerful but also dangerous tools, especially in our tense world like right now. And I was wondering if somehow, change like this allowed by technology in our financial system should not also be accompanied with a change in the paradigm of identity management. And on that, as it's been said, there is a lot of development and innovation on DID, decentralized identity, and zero knowledge proof, and all that, basically saying, well, I want to transfer inside my country, so I just give my name and nationality or card number. Actually, I don't give the card number. I just validate the fact that I do have a card number. But if I want to transact with US, for example, where it's a lot more harder, I can validate myself to prove that, okay, I'm not a US citizen, I'm not that, I'm not this. So, and we are far away from that. I mean, and this is even, if market infrastructure is already hard to change, this idea of population management and population protection, I would not talk about consumer protection, but basically the same thing. It's even a broader work. So can central bank play or advocate in this way, and should it be, at least, and how it will take into consideration this kind of risk? Thank you.
Different questions. One on how is the knowledge that clearly is being accumulated in the central banking community is being transferred, through which fora, etc. And then the other again on the question of identity. And in fact, I think the identity is indeed quite essential. It's hard to imagine that digital, money and digital assets can become a reality without, a digital identity. In what form, ever. Who would like to start? On knowledge transfer, maybe. Let's start on the knowledge transfer.
Well, on knowledge transfer, the IMF and the World Bank have been doing an exceptional job in picking the minds of the central banks that are at various stages in their development and putting it all together. And so I expect that work is going to continue, it's going to get more entrenched. And again, at the central banking level, I think one of the most flattering things that happens is if others copy and paste what you're doing. And from that point of view, again, I think access to knowledge has been very easy to come by. So we do welcome that. A session such as this, you're just going to be very cursory in terms of a lot of the issues. And so to the extent that central bankers are sending their payments units and teams and exposing them at the conference and workshop level, that has also been very, very helpful. And in some cases, we almost have to manage the bandwidth in terms of the availability that we make of ourselves in terms of knowledge sharing. But it's good, and it's also helping us to further clarify and refine our own processes.
Could I ask you just a follow-up question on this? Because there is a concern that with the inflation increase that we have seen, that central banks are now thinking about other things, and that this could delay potentially giving considerations and pursuing further these CBDC projects. Is that a risk, or you don't see that? Priorities have shifted, maybe.
I can't speak to that. Maybe my colleague from Singapore.
No, so 2 points, right? I think the knowledge sharing is absolutely critical because if the end objective envisages going cross-border and going global, right? It is not something that, MES can do many experiments, but MES can't bring it cross-border and bring it global all by ourselves. So I think first, most of our projects have been done in partnership, with like-minded central banks, not all developed jurisdictions, some emerging jurisdictions, but are also keen to build muscles in this area. We also try to do this in a way that is kind of like diversified across regions, not just with our neighbors. Second is we also make it a point to do it through the BIS innovation hubs, right? Because ultimately, they become the repository of knowledge, right? But through the innovation hub structure, right? We push very hard questions, and then we find like-minded partners to solve these questions. So as I said, over time, that innovation hub network, right, has actually become a very, very valuable store of knowledge.
And as a private player and technology company, I can only encourage you to also invite the private sector into these exchange, since we gather a lot of experience and are continuously working on the forefront of what the technical possibility may bring. And we're engaging, in fact, with many central banks around the globe, and also plan for another event in Africa, for example, to invite central banks that already have gathered experience, share that with others, and here be a facilitator of that knowledge transfer as well.
And Rohan, just to come back on this question on ID management, of course, your company does both ID and, you know, famously banknotes, of course. But how do you see this need for either combining both, or we need a strong digital identity solution in order to really, you know?
Honestly speaking, it's a complex topic where I also see two parts of a coin. On one side, I fully agree with you that we need to have strong digital identity in order to avoid fraud, in order to also gain efficiency. And here we come up with stacked concepts where, depending on the use case, depending on the level of the amount of value that is being transacted, of course we need to require stronger identity checks and more procedures. On the other hand, I also come from the cash side, where the fantastic value that cash brings society is that it can be used independently from the issuer. And that provides such a huge value to society that we would like to also maintain that in the digital space to a certain extent. Of course, we need to set the right parameter, which is then also basic of the political debate. And that means the solution we need to provide has to be capable of both, being fully private, but also being fully transparent. Mm-hmm. And then we can set the right level depending on the stakeholders of the ecosystem that needs to build that digital currency.
Very good. Are there other questions from the audience? Other questions you would like to ask? If not, let's maybe a few final remarks for all of us, maybe reflecting on the topics that we had discussed, a wide variety of different topics. I'm not quite sure, we haven't spoken a lot about we spoke about retail and cross-border, but not specifically about other use cases, which I think is a good thing. And Wolfgang, coming back to the point you made earlier, this is about, I mean, it's also my view, equipping the financial system with new capabilities, and it is up to the financial system to then innovate and find the right use case. I'm working for a consulting firm, and we are often being asked as consultants, what is the use case, you see? And I said, we are outsiders, you should know what the use case is, you see. But, so I think it should be more about, and again, this point about, is it, coming back to the comment that was made in the earlier session, is CBDC a solution in search of a problem? I think that's fundamentally the wrong question, because if it is only about addressing problems we know of, then I think our approach will inherently be rearward-looking, you see. And I think CBDC is very much about being forward-looking, and the idea of the iPhone, I think, is an excellent one, right? At the beginning, the iPhone was a telephone, but today it can also do phone calls, but, so, again, look, I wanted to ask you for some concluding remarks, but I think the case for CBDC, it still remains an open case, I think, to some extent. I think the level of conviction is not where I think it should be. Be it simply on the basic assumption we recognize that there's a lot of innovation in blockchain-based financial applications. We want our system to be able to use it. We see as public sector that we have a role to play to advance it, you see, either as catalyst or either as making available a medium that can be used as native instrument on these infrastructures. But we have not reached that convergence yet, and many central banks still remain quite hesitant. But look, I'm inviting you now for some final thoughts to conclude the session. And yes, anywhere you could go anywhere you like, of course. Shall we start with? You want to start, Leon, or
okay, sure.
Yeah? Okay, so let's start here. And then
Yeah. No, so I agree with you. I mean, the starting point is, where is your conviction, right? And I think for us, the conviction is there is a great promise in looking to harness distributed ledger technology to transform financial services, right? Now, if you look at that framing, it is actually not just about CBDCs. CBDCs is just one payment instrument, right? Just so happens that this panel, focuses on CBDCs. But I think the broader point is, where is your conviction? And if you do have the conviction, right, that there is an opportunity to harness blockchain technology to transform financial services, right, then that is an important starting point. Then after that, the next problem statement, right, is when you think about how to approach transforming financial services, where do you start, right? And if within your jurisdiction you believe that there is space, right? The 4 key questions I posed just now. Number 1, what is your value proposition, right? Does it add value, relative to today's payment modes? Second, how do you reconcile, right, different objectives across different stakeholders? The third, how do you clarify, right, the role government, central bank, vis-a-vis the private sector? And last, which is a very, broad point, right, how do you be bold, because we are in the area of technology and innovation, how do you be bold, but yet be responsible, which is safety and soundness? So these are all very seemingly opposing things, but, if you can strike a balance and reconcile, all these objectives in a coherent way, then I would say that, yeah, you have something going there.
Very good. Wolfram?
Yeah, I'm also similarly convinced that public currency has such an important role to play in the ecosystem, in the financial development of economies, that we have to carry that mandate in the digital space. I'm fully convinced about that. And if you look at the big picture of data and crisis, financial crisis, or natural disaster, or whatever crisis we have seen, and unfortunately the world is not developing in a less crisis situation, the role of the split between M0 and M1, for example, is essential in easing out crisis situations. And what if the general public doesn't use cash for transaction anymore? What is the instrument then? So already for that reason, I believe that we need an instrument there. If we consider what we have just discussed on efficiency and interoperability and overcoming a fractional infrastructure that we see currently in the world, there's a lot of potential of collaboration of central banks amongst themselves and with the private sector. So also there I see a lot of potential. Sometimes I feel that central banks sometimes are afraid that if they are driving that engine too fast, they are so powerful that they are afraid that they may destroy some private initiatives. So it's also a balance between how much engaging and how much challenging and encouraging the private sector to grow. But eventually, I'm fully convinced that central banks have to have that mandate in the digital space, and CDBC can be the tool to achieve that. It requires a stack of regulation, which is still to be overcome and difficult to solve, so we have to continue working on that, and a stack of technology, which has to be prudently designed, not adding another vertical to compete with the existing one, but designing it as a platform that allows others to develop new products and services on that. And that's the way how we look at it, and that's the way how we engage with central banks around the globe. And I'm happy to continue that dialogue with all of you and invite you to embark on that journey, which sometimes requires bold decisions. Sometimes I would also like to see faster movements, but I see a lot of progress, and that's encouraging.
Very good. John, final words.
Let me say that I agree with everything that's been said. Both of my fellow panelists' closing remarks. I think this conversation is very helpful in terms of putting the emphasis on how whatever it is that the central bank or the public sectors are providing can actually help in terms of the kinds of innovations that can be facilitated in the private sector. So that's one way to look at what's happening and to help to determine where you draw the line in terms of the contribution. The other thing is in all of what's going on, this has to be a very closely coordinated effort, because I think we need to make certain that some common standards emerge and are applied in this process. And I think because we're starting to focus on the cross-border aspect, it's going to help accelerate the focus on standards. And it's also going to help to, I think, accelerate the focus on some of the identity management-related issues in the personal space, as is already the case when we look at commercial entities and how we're trying to have better profile information for cross-border payment. The other thing that I think is very positive in this space, even if at times it evokes some defensive reactions around the quote-unquote big brother effect, is that it focuses, as it rightly should, a lot more the attention on privacy and the governance issues around personal data. And the opportunity here is not so much, I think, about deciding whether we should allow the government to have access to information, because the government should and always be required to be responsible, but how do you build the right kind of governance mechanism, taking advantage of technology, for example, so that we can achieve so-called data sovereignty in the sense that some might be aspiring. And so I think if you approach it from that perspective, we should begin to accelerate people's thinking, not only just about how a government could misuse their information, but whether we have strong enough governance mechanism for the data that we're already generating and is in the private space. I think we don't want to leave that out of the conversation, because then I think it creates too much of an imbalance in this conversation in terms of, whether it's a good thing to digitize the central bank money or not. But these are all important conversations which, hopefully from a knowledge sharing perspective, will continue. Thank you.
Fantastic. No, I thank you very much. Thank you to the audience for your question. The time is up. So yeah, the only thing I can say again, thank you for participating in the panel. Bye-bye.
Ladies and gentlemen, thank you for your attention.